Greetings, everybody. It's Jeff Scott. It is about 9:15 on Sunday Eve. Sorry for the late, but I had a busy weekend with my day job with having a bunch of docs and industry folks down in Miami. Bring up my PowerPoint. I titled today "On the Verge of a Correction or a Breakout" because it just feels like this market's going to do something, yet it doesn't do anything. And I'll show you what I'm talking about. And there are signs of it wanting to go down, and then every time the market pulls back, the market shows resilience and rallies back up to new highs. It's a confusing topic. I think you can say it's a confusing market. I'm going to show you what I think and what I'm doing about it. As always, for education purposes only, I'm a doctor, not a broker. I'm not licensed to tell you what to buy or help you buy. I do this for purely education. I am independent. I pay for the tools that I use. No one pays me to say good or bad things about them. And trading involves risk. And I do talk about options, and options carry their own risk profile. And if you're not an expert with options, I highly recommend you refer to the Options Industry Council and learn options before you trade them. I have lots of influences. Some of them are here. Sometimes I forget to update my deck, so I'm not dissing anybody that's not here this week. But really what I am is I've become my own guru. I'm not a guru, but I'm my own guru for myself. And I've learned the best of CanSlim, improved by Morales and Katcher, taken to the computer, and I think improved by Woodward and Brown, with how to be a great trader, which I learned from John Person. He's got some great indicators and a philosophy of trading, and I've blended the two, and that's how I trade. Van Tharp Money Management, and my buddy George Lee, fantastic trader in the Pacific Northwest, who I've had multiple opportunities to share the podium with. I have lots of software. I try to hide my desktop intentionally. I need TradeStation or Thinkorswim or both. HGSI for my analytics, EdgeRater to automate some of the process, and I will look at seasonality. And we're getting to the part of the year where some stocks have some special seasonality. My meeting is in 2 weeks. I'm really much looking forward to it. My voice is starting to recover, although I'm still coughing a lot. There's some virus just taking a while to get over it, but I'm looking forward to it. We're going to do our first webinar for attendees this coming Tuesday, when I'm going to review the words and wisdom of Ian. This is really a great webinar for folks that are new to us to understand the vocabulary, because it's that vocabulary that'll trip you up during my live meeting. This will be a closed webinar, only available for those participants of my meeting. The basics of the meeting are there. $400 if you're attending John's meeting, $500 if not. I'm above 12 attendees. I've got a number of people that will probably be doing it via the web. If you have interest and you let me know in the next 24 to 48 hours, that's fine. If not, I'm done. We're going to have a great time. Looking forward to entertaining folks on Saturday the 2nd for dinner. I think we're going to be doing it at the Capitol Grill, where we've done it in the past, and it'll be an over-the-top evening, I can assure you. The website for HGSI is important because it does offer a free 30-day trial, as well as a number of investing strategy movies. I want to give some kudos to George and Matt of HGSI. Those who have been long-term users know that there has been a delayed intraday quote option using Yahoo Quotes, which would allow you to update anytime during the day. It would take about 10 minutes to do a full update, calculate all your groups and ranking, and you'd be getting quotes that were 10 minutes delayed at the time. Yahoo got purchased, and they've now eliminated that free quote option, at least the way that we were getting quotes into HGSI. It took 2 weeks, but not only did they find a replacement for the end-of-day quotes for Yahoo, which they did, are slower, I will be the first to agree, and they told us that, but they surprised us, shocked us with a live quote option from Thinkorswim, which is fast as can be, faster than Yahoo. So they took it to another level. Thanks, George and Matt. Stock patterns are cyclical. I feel like I've said this for a year. We have taken the top off. We run up, and then we pull back, and right before we think we're going to dump, we run up again, and before we think we're breaking out with a new bull, we pull back. So we are in almost a Darvis box with a bias to the upside, where there's not a big range. Is it 2 or 3% in these moves? This is a tough market to make money in, especially if you trade a lot. Personally, I believe the way you make money in this market is you don't overtrade it, but more of that to follow. So, what am I doing in that stage 3 of uncertainty? I've raised cash. I've got more cash in my account now than I've had in ages. I have less positions, although I'm still weighted to the long side. My positions are smaller. I have sold some way out of the money calls to pay for some puts to protect some of my bigger positions. And I have a few short positions in play as well. This really is, I think, also a stock picker time where you have groups and stocks going up, but you have others going down. And you can make money in this market. It just takes a lot of work. If you look at the sectors from Friday, certain things jumped out at me. Utilities weak, healthcare weak, biotech mixed, but mixed to the weak side. Retail is starting to show something. And, on Friday, you can see the XRT was up 2.81%. Here's some of the retailers: Target, SuperValue, Barnes & Nobles, Nike, Signet Jewelers, Under Armour, Michael Kors, all showing some bottoming patterns. So is retail about to move? I guess part of that would include discretionary with Target, TJ Maxx. I have American Eagle Outfitters, Abercrombie & Fitch, I've got Gap, and all of them this week showed some nice recoveries. Industrials and technology weaker, although over the longer period of time, it's certainly been semiconductors have been super strong. Energy. Is energy broken its very long-term downtrends? Maybe. I think it may. And then you look at financials where the big banks were weak, yet there was some improvement on the regional banks. So certainly not all red, green, mixed at best, and just giving you an idea, or me an idea, that some things are working and others are not. Let's go into Thinkorswim and very quickly look at the major markets. And I like going into Thinkorswim. I don't want to do that. Hold on. Because I think that Thinkorswim, it's much easier to see it there than when I show you in the PowerPoint. Let's just pull up this one. And this is should be on daily. It'll take a second to pull it up. And let's take a look at what we have. So clearly, ES, NQ, TFs are lower left, upper right. But all of them are showing some weakness. So let's take a look now by maximizing the sell. And let's go through one at a time. So this one peaked, 1, 2, 3, 4, 5, 6. 9 days ago, the E-minis peaked. Volume is coming down, although a couple of high volume days here. A PPS sell signal early in the week last week. So off its highs, right below the 17-day, but above the 50 and the 200-day. Right now, I would say the E-minis look like a gentle pullback. The NQs, well, even more gentle of a pullback. The all-time high was set on Wednesday, and we pulled back a little bit down to the 17. That's still a very strong chart, and it's in a PPS buy signal. When you see the green above the yellow, above the red, or on a white chart, green, blue, red, that tells you the 17 simples above the 50, above the 200. That's one definition of a uptrend. If I go out to the Dow futures, they peaked 2 weeks ago, and they've come off a little bit, but they peaked at 23,557. They closed at 23,263. So they're down about 300 points. What is that? Less than 2%. So really nominal pullbacks on these. Still in an uptrend. The moving averages are lined up correctly, but definitely in a soft patch. Now, is this part of a topping process and we're about to come down hard? Or is this just another one of these pause to refreshes, and maybe it runs down to that 50, which is done in the past, back here in September, and then gets another upturn from there. Now, the IWM, or the Russell, big uptrend, and it started correcting earlier, 150.68 down to about 144. So it dropped 6, so about 4% moved down on the Russell. It's already started moving back with a new PPS buy signal and has taken over its 17-day moving average. Hard to say that this looks like it wants to crash. And if I look at the VX, it did raise, it did break above this very strong 200, where it's failed multiple times in the past. So if this holds and it goes higher, increasing volatility would predict that this market may have some movement to the downside. And then the dollar struggling down here, pulling back to the 50 weekly. And if I very quickly will switch us to the weekly charts, if you bear with me. Those that come to my meeting, anything that you see in Thinkorswim that you want, just email me and I will make it available to you at the meeting. I don't think I have anything that I can't share in Thinkorswim. I'd have to be certain of that before I gave it to you. But one of the things I like to do at the meeting is give out some of the things that I've paid to be developed of indicators, and that will be for paid attendees, whether you're on the web or you're live at the meeting. So pretty much everything I'm showing you, I will be giving you. This is a weekly E-minis. Is this topping here? Well, was it topping here? Was it topping here? You know, what's the likely thing to happen here? Is we pull back to the green 17 weekly, which is not much different than a 50 to between a 50, 75 day simple, and we bounce on the and go higher. That's the pattern we've had. Pull back to the 17-day weekly and bounce. And you can see the weekly 1750, 200. Quickly on the Dow, NASDAQ, strong as can be. It's just a little bit off its highs. Hard to say that's bad. The Dow, you know, it's 2 weeks down, but how far off the highs are there, and is it going to kill us if it too pulls back to its 17 weekly at 22,562, which would have been a ramping 100-point drop on a 200, on a 2,300, that would be about 4.5%. You know, hard to get depressed here. The IWM recovered some this week. The VIX, as you can see, longer term is still stuck in a low range. And then the dollar really struggling here in between these moving averages. Had a week, the prior week was weak, and I guess that is today, so that one doesn't really count. So I look at these, and what is my hypothesis? My hypothesis is the market looks like it's tempted to pull back some. I think those 17 weekly moving averages are, you know, look compelling as destinations, but we're not talking a market thus far that looks like it's done and is about to have a major correction. I like to look at my Genesis views because it allows me to overlay daily, weekly, and monthly, and I have columns of E-minis, NASDAQs, the Russell futures, NYSE, and the Dow futures. If I look at the monthly, we're in an uptrend. If I look in the weekly, you know, except for the Russell, which had pulled back first, we are in uptrends. And on the dailies, Thursday was such a strong day, we had reversal signals, PPS signals on the daily across the board on Thursday. Now, I look at other things that might affect my stocks. I know that banks will go up when interest rates go up. So I look at the 10-year on the left, 30-year on the right, and you could see on the weekly chart here, this where I'm pointing at in white, rates dropped some this week. That means banks probably do not have the best week, or other entities that are dependent on a high interest rate environment. The AD lines had softened the week before. In white, yellow is the S&P 500s, but this week they picked up some. So it's hard to show a huge divergence on the AD lines that might be negative and pulling down the markets. In fact, if I look across the NYSE, AD line in white, you can see it actually reversed some after falling for a couple of weeks. And if I look at the performance of the major market ETFs, the laggard, the IWM, actually turned up this week. I don't see something here that says that this market is necessarily in trouble. Why do I look at charts like this? Because I'm looking for that period of time where that AD line starts to come back before the markets do and gives me a signal with a divergence. Now, breadth softened, and this is number of stocks above the 200 and above the 40-day moving average. It's softened, but it's still middling, But here's the interesting thing. Thursday was so strong that my 13-week high-low is almost overbought, just on the basis, I think, of Thursday. So from a very, very, very short term, we are getting overbought in this setting of a market that's selling off. So that might portend some short-term weakness to work off this rally. McClellan, I'm not by any means hold myself out to be a McClellan expert. I look for divergences. I look for extremes. And what I see here on the oscillator and summation index is neither. And I don't see a signal from that, so I move on. Buckets. These are obviously Edge Rater. The benefit of Edge Rater is I used to have to do some of this by hand. And now I just hit a button and it generates it for me. And what I'm looking at on the right is take all the stocks in the S&P 1500, put Bollinger Bands on them, put the midline on the Bollinger Bands, and ask how many of them are above the midline in green and how many are below in red. You can't get more split than that. Yes, 50-50 is more split, but that's pretty darn close. And then I look at if I take those Bollinger Bands and have 10 groups between 0 and 100, every decile, and then a 1 for above and 1 below. I like to see where those stocks are hanging out. And, there's some growing areas right below the midline, but there are very few stocks that are clobbered in below the Bollinger Bands nor above the Bollinger Bands. No signal here, neutral. This was kind of scary. On the left is the NASDAQ. On the right is the NYSE. And this is Edge Rater's interpretation of Hindis. I look at it in stockcharts.com. I look at it in a number of other places. There's some small variations. What you get with a Hindi are typically lots of volume and your lots of new highs and new lows. And as the market is starting to change its color, and it's sort of a entropy or a busy, high volatile period of time in an uptrend where the holders are switching for the strong holders, the brokerage houses, the hedge funds are selling off, and us weak holders are buying them. When I see 4 Hindis in the NASDAQ in a short period of time, and 1, 2, 3, 4, 5, 6, 7 on the NYSE, I have taken notice. I am concerned about that. Here's the problem. Only 1 out of 4 periods of Hindis is going to be a significant correction. I do look at some very long-term signals to see if I'm seeing a sign that the market has changed its color. It hasn't yet. I have found when I chase a 2% or 3% pullback and I start selling positions and buying protection and playing contra ETFs, I get my lunch handed to me because the market turns around and I wish I didn't spend all that money on premium that vanishes. So I try not to go crazy on the protection until the markets actually start to roll over. But I have to be aware because these Hindenburgs have got my attention. Market tone, you'll notice here, this is a series of kahunas that happened on Thursday. It was a very strong day. And what you really want to see is a choppy market here, get a series of kahunas, and switch out of a red and yellow into one that has green. And what you really want to see is when you switch out of a chop and start to get into more of a buy signal. Well, we haven't had one in a while. We did have a nice round of of kahunas, which just means big moves in the major indices, but they haven't put us into a market buy. In fact, it's still the biases to the downside. Sector strength, it looks great if you are into, I believe it's financials and technology, and staples off a little bit. But is this good? This is chopped. This is some working, some not working. And as I look at this is rotation. Red, 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 now going into green on the financials. Lots of green, then it goes red and yellow, and then back to green. Lots of green, and now it goes to red and yellow. So you're seeing individual sectors rotating in and out in this market. And that may be propping up the indexes, but still causing some pain on your positions. Should I stay or should I go? I think that was a Clash song. And I look at the canaries here, the good news. They haven't broken. It's still above the blue, which is the 50-day moving average. Okay, That's a should I, that says I should stay. Yet we had a big data downside on Friday. We're in a weekly bongo sell signal. We've had multiple Hindis. As I say, should you stay or should you go? I'm looking for a signal. I'm not getting it yet. Know your news and earnings. It is a holiday shortened week. Therefore, there's not as much news as you might expect. If I paid attention, I think I saw that the Senate will vote when they come back on taxes, so that's not an issue right now. There are quite a few companies with earnings. I'm not going to go into them that deep. I know that I have several of these. For example, whether I'll have them or not on earnings remains to be seen, but Baozun, a Chinese internet play, I have some of that. Lowe's Company, I've been in and out of that. I don't have Signet Jewelers. I made money there on the short side. It looked like it's had a turnaround. GameStop, I think Brocade is being acquired. Deere, H&R Group. So a lot of companies that are probably common holdings will have earnings. So I've got them listed here. Don't trust these. I can't vouch for them. I'm just putting up. I've taken them from a source. I think these come off the internet. This is probably one of the most important things that I teach. It's a judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings date is scheduled. I'll tell you, I held Amazon 2 quarters ago, and I got hammered. I have a long-term gain in it. I played puts and calls around some of my long-term holdings, and I pinched my nose and closed my eyes, and I watched my gains for this year shrink as Amazon pulled back. Then it came into earnings this time. I made a judgment call for the same reason, long-term holding, lots of gains in it, optimistic long-term, like what they're doing with Whole Foods, and the stock goes up 180 points and I have a lot of shares. You have to know, you have to make a decision. Waking up and saying, oh crap, I forgot it was earnings dates is not a decision. Market thoughts. Growth outperformed this week. Major indices continue to appear in topping process, but we're entering a seasonally strong period, including the holiday shortened week. Market rotation hides underlying damage as technology continues to lead, retail is stirring, and energy appears to have broken out from a long downtrend. Despite the season, beware of upcoming events, including my dog, who I have to go do something with could increase volatility, such as a tax vote in the Senate, Fed rate increase in December. Yet every time we get a down morning, we quickly rally as buying the dip is still in play, and it is raining Hindis. On that note, I'm going to hit pause, go deal with my dog, and be back for my top-down review. All right, dog is now with his mommy, so I can go on. So let's go and take a look at some charts. Futures are open. They opened up a little bit soft. Asia is mixed. I'll come back to this in a second. And right now, as you can see, well, they've come down quite a bit. The NASDAQ futures are down 21. The Dow is down 63. So they've weakened since I've started doing this. I've learned to not get that upset. I might wake up and they could be down 200 points or they could be back up. And it's been that kind of a market. And I think you know what I'm saying. And then by the end of the day, it'll be different again. This is seasonally a good week, but there is a lot of things that could drive volatility. And you just want to be in the right stocks, the right industry groups. Last week, a lot of people thought it was a bad week. So these are all the groups that I track. My stocks are in here, the stocks I had on Monday morning. Where is it? Somewhere in here. I think it was like 0.86. So these were the stocks that I held as the week started. So you could see my original positions, if I held them, would be up 0.83. Now, reality is I have a lot of option positions, so they have much more of there's leverage there. And I didn't necessarily hold everything for the week. What was funny, stocks that I thought that might be shortable means if they took out a low or they did something, they actually were up the highest on the week. And if you look at through some of the other things, you could see that IBD 50 was up 1.6, 1.7, and the HGS 100 was up 2%. So, you may have seen on TV that it was a negative week for stocks. It wasn't a negative week for our stocks. All right, so let's shut this down. One of the things I always do on my own portfolio is I want to get an idea of what the market's doing. I think we already know what the market's doing. We went and looked at a lot of different things. This is TradeStation 10. It's the new form of TradeStation. I think it's released now. I've been a beta tester of it. I think it is more stable, and I like it. But what I like to do is, well, remember I talked about Amazon earnings? These were bad ones. These were good ones. My portfolio wasn't as happy with me in this period of time, but it was made it up for holding it. But, you know, that was a decision that not everybody would have made. It's a decision where I would have been better off selling up here and buying it down here. Not so easy to do. And there's some tax ramifications, but I never let that determine what I'm going to do. So let's go into the E-minis. So let's look at the E-minis. We look first at is there a green up arrow or red down arrow? Those are PPS buy-sell signals. This is daily, weekly, and monthly, so we're pretty much 3 for 3 on that. I look at the paint bar. A red paint bar tells me I don't want to be going long. I either want to be short or flat, or holding my positions, not buying new positions. A green bar is buying it or holding. You don't want to be shorting. And a blue bar is neutral. You like to see an uptrend with green bars. When you start to see a red bar, that tells me that this is under pressure on this uptrend. Okay, that's easy. Up here I see these red dots on top of the weekly. These are showing signs of MACD divergence and might give me a signal that this market is under pressure. So I clearly see up here a number of things that tell me that the E-minis, although they're in a buy signal, are not a whopping super strong buy and go sell the farm. I look at where price is within the envelope here, and it came into the envelope. It's right in the middle. That's a neutral signal. And I look here at my high jump bar, which tells me not a signal. When it gets above 90 or 95, I get concerned. And I see the daily bongo, that red dot here is negative, but the weekly bongo is still positive. I see no reason to go out and sell the farm here, even with those futures, but enough for me to be concerned and glad that I'm not my longest I've been and I've raised some cash. All right, that is the E-mini. Let's take a look at the NASDAQ. Green arrows, so it's still in a buy signal. Blue, green, green, a little bit stronger looking than the E-minis, no surprise there. Definitely have some divergence. We're moved into our envelope. Also, daily bongo's red with a green weekly bongo, high jump at 60. So uptrend under pressure, but still an uptrend. I look at the Dow. Same as the S&P, it's still in an uptrend on the daily, but I've got red bars, I've got MACD divergence dots, I've got a daily bongo red, and my high jumps down to 44. Clearly, this is a market that has been extremely strong. Look at the weeklies, but it is under pressure here. And hence why I said, is this thing ready to roll over, or is this just going to be a head fake and blast off? And lastly, the Russell, strongest of the bunch, still got green paint bars in a buy signal, although on the weekly, it did go to a sell signal with that MACD divergence in play, and its weekly bongos are red. So some things look better, but it too is under pressure. So market's under pressure near prior highs. No shocker with the Hindenburgs. I would be surprised to say they were super strong. The dollar, we'll see what it's doing today. It's perked up some, okay? So that might be interesting to see if that leads to anything. If the dollar's up, then that can't be good for gold. And gold right now is trading below the close on Friday. And I guess the other thing I like to look at is the VIX. And right now the VIX, as you can see on the daily, although it had moved up, these are the VIX.X, not the VIX futures. Shooting star-like candle and has pulled back since. So I put all that together and say, market's still an uptrend, but it's under pressure. Well, I know a lot of you don't have TradeStation. Some of those things you can duplicate in Thinkorswim. But if you got HGSI, all you got to do is go down to the Woodward & Brown user groups, hit Major Market Plus, hit that warehouse view, and go under View and hit T1, which is going to be the top-down view. So this is ranking them from top to bottom on the last 1 day of price and volume, some influence of 5 days, and then a little bit influence over 3 weeks. So what do you see? Small caps, mid caps up at the top, NASDAQ up here, and industrials and transports are the big stocks on the bottom. Well, that's an interesting split. But again, think about what I just showed you with the red paint bars on some of the bigger stock indexes. I might look at the S&P 500, and let's blow this up here, and let's make this a daily. And what do I see in the S&P 500? You know, I even talked about, this was what we wrote last week about, is this something that is going to pull back to its 50? And just out of curiosity, let's look at the S&P over the last 5 months. So we peaked here, we pulled back down to here, 2.3% correction. I peaked here, I pulled back down to here, 2.1%. I peaked up here, I pulled down to here, 3%. I peaked up here, I pulled down to here, even less, 1.5. I peaked up here, I pulled down to there, 1.6. A 3% correction gets you down to about 25.20. We've only come down some. We've had very shallow corrections. We are going to get a bigger correction sometime. Odds are we pull back to the 50 and then we resume from there. That's what we've been doing. But one of these times we're going to fall below. We're going to try and recapture it, and we're going to fail again. And that's when I think the bigger drop's going to occur. So here's your high road scenario is you just take off from here and go back up. The medium road is you pull back to the 50 and you resume the uptrend. It won't be a straight line. It'll be something that looks more like this. And the low road is that we break down, and despite it trying to recover, we drop to further perhaps down to the 200. So we've been living the high road, folks. But you know, at some point, things are going to change. So the S&P, the Dow Jones Industrial down here on the bottom. Same drawings, same story, same issue. The NASDAQ. You know, looks stronger, but the same pattern. I'm looking down here, 4.4%, 4.5%. Here, a 4.5%. It's going to get me down to about 6,500. More likely, I pull back and I bounce off the 50-day moving average. So I think all of these are in play, what I'm showing you, and in my mind, I am preparing in my protection schema that I do, which I've learned to not go crazy on, because when it bounces, they disappear. I am looking at what happens if I'm wrong and we don't bounce at the 50. How do I protect myself from a bigger correction? That's some of the things we're going to talk about at our live meeting. Now, I might want to look at other things. We've already looked at the dollar a couple times, but just to pull it up in HGSI, and I do this, part of the reasons I do this is not just to tell you what I think the market's going to do, but it's a chance to show you how I use the different programs. So in HGSI, you can see that we had a nice run up here, which was 4.6%. And now we've gone the other way, and we've pulled back 2%. So are we going to bounce here and go up? We'll have to see. There's the dollar, the VIX. Again, it matters whether you're using at the cash traded, the VXX, the VIX.X, or the futures, because on the cash traded, although we're above the 200, it looks like we've peaked and we're already heading down. And then gold and silver actually looked better last week, but right now with the dollar strength and the market selling off, we'll see. Is it different this time, and are we about to go back up? This is gold. We're above the 50. We had a kahuna this past week. We've got a new weekly bongo to the upside, and that's when you see the market move. I actually bought some nugget this past week, although I think the gold miners are not performing as well as you could see here as gold. And then silver also looks pretty good, breaking above the 200, but we shall see. So the next thing that I do is I go to 7 industry groups, hit the warehouse view, and I see that we have 174 industry groups, and I want to look at what's moving to the upside, and these are the types of things that are moving. Remember I said retail, specialty apparel, publishing and broadcasting, apparel, footwear, mass merchants. So 4 of the top 10 are clearly retail focused. I said energy looks like it's turning around. I've got exploration production. I got oil and gas services. Okay? And so that's where some of the action is. And I said technology's been strong. There's my semiconductor devices. And then biotech's been very volatile, makes it to the top 10. So I've got 75 groups to the upside, and to the downside, I've only got 7. So strength to the upside, at least on this 2-day force, as the week ended, as I showed you how difficult, or how wonderful rather, Thursday was. That's probably driving some of this. Let's just look at then, if I right click and then left click, change to index group, I now list the stocks. So let's look at a couple, and let me show you why I made my comment that it looks like retail might be bottoming. I love this time of year. More toys for me to buy, more things, because everybody has their Black Friday sale, even technology vendors. Here is Foot Locker. And let me take off VSA. That's Ron's thing. I use it too, but he's the expert on VSA. Foot Locker's been in a downtrend from 72 down to 32 over the last 6 months. It's been basing pretty much from a missed earnings back here in August until now. Then all of a sudden we have a bunch of pocket pivots, 2 days with kahunas, volume took off, the industry group is spiking and went to a weekly bongo green, and we had a gap up. And I don't know why that's hiding. Probably a buyable gap up, but it didn't meet the criteria. I think that this looks interesting. This is Foot Locker. Shoe Carnival, similar pattern. Long-term uptrend has broken above the 200. Everything is green on a kahuna. Always important to look at earnings. Ross Stores broke out on earnings. Abercrombie & Fitch, same pattern. And then, as I mentioned, I got American Eagle, and I've got the Gap. And let's see, they may be in others, but let's just put them up there. AEO, not AEOI, AEO. Hello, I need to go to sleep. I've had a long weekend. Let's go. Gapped up, GPS, the Gap. Oh, I guess it doesn't like that soon. Same, even something like Urban Outfitters. This is not one stock, folks. This is a sea change. That's not it. Hold on. Same pattern again. I think you need to be owning some retail. I told you the ones that I bought. I've been in them for a while off of this bottom. So specialty retail apparel looks interesting. Oil, gas, services. Everything's below the index, which is somewhat bothersome. Let's just take a look at a couple. Key Energy. So here's a stock that's been in a long-term downtrend. A kahuna here, still the weekly bond goes red. I don't feel the need to run out and buy some. Helmerich & Payne looks a little bit better. It's above the 50. It's still above the 200. You do see the industry group is strong. Again, don't feel the need to run out and buy some. This guy, I can't even interpret that. So here's the best looking chart of the bunch. ProPetro Holdings, Pump, what a great name. Makes earnings, great earnings per share growth. It's an IPO. No dividend. This one looks the best, but it's an IPO, I assume. Secor, extraction, oil and gas, broke above the moving averages on a pocket pivots, kahunas. So not the perfect storm here. You don't always have good earnings. You don't always have great chart patterns, but you've got a lot of these stirring, but a lot of them are stirring from being beaten up. Mass merchants, another retail, and popping up there is Walmart. A lot of talk about if Walmart's got the secret sauce to beat Amazon. I'll believe it when I see it, but who says you can't have more than one winner? Right now, Walmart looks like it's a winner. It's been in an uptrend for ages. It's been above its 200, and it had a Bible gap up on Thursday, I believe, on earnings. Next earnings, the 20th, it pays a dividend. It's run some. Walmart is a winner. Target, not so much. Big Lots, looks pretty good as well, although I've been in the store, so I'm not buying the stock. Mobile breakout from a squeeze, pocket pivots, kahunas breaking out here. Actually, the stock looks pretty good. All right, I go down to publishing and broadcasting. I don't know anything about this industry group. I see a big 5-day move on time. I don't know if there's some type of takeouts going on. Is it just on earnings? I would not be buying in this because I don't know it. I have no edge, but that's time. And then Meredith Group, MDP, breaking above the 200-day moving average, kahuna turning green, some kahunas and pocket pivots, falling earnings, pays a 3.4% dividend. Don't know enough about that group. I would have passed advertising and marketing. This Omnicom, I believe, is like the big kahuna when it comes to advertising companies. Clearly a downtrend. Is this a bottom and it's going to break out? It could. It's got a kahuna, OBV's turned up, some pocket pivots. When I see something like this, I get a little nervous because I got to get through a 200 and a 50 before I break out. I think that's a lot of overhead supply against it. WPP. I guess this is all gauged on the last 2 days of movement because I don't like anything else that I'm seeing there. Other retail, so maybe I was wrong. Maybe there's 5 retail groups. Here's one I actually bought on Friday or Thursday, Ulta Salon, another stock that's been in a prolonged downtrend. Is it done going down? I actually got a higher low here. I've got a PSAI reversal. I broke above the 50. I got a couple kahunas and pocket pivots. I still have a weekly bond go down. I make earned money. Seems fairly priced here. Earnings are coming out in the next 11 days. I'm not sure I'm going to keep it to earnings. I'm looking for a pop back up to that 200, and then I'll reevaluate. Computer hardware and storage. NetApp. The first two are ones that I spied ages ago, and sometimes I don't hold things long enough, which in the beginning I said holding things longer has worked this year. Well, NetApp really was kind of in a Darvis box here for months, and I got tired of it. I had some profits. I took them. I left. It had great earnings come out, a Bible gap up, and it looks like it wants to run further, and that's NetApp. That's the only one above the index in the group. Pure Storage is one I told you about when it was about 13, when I bought it originally. And it just was too small for me to keep around. I mean, it broke out, did nothing, went sideways, and then it had a Bible gap up on earnings, and that was a good point to buy this stock, and I missed it. But Pure Storage, sometimes it's not about the fundamentals. You got to buy the charts, and this is clearly a breakout here, then a sideways, and then here I am breaking out into the moon. So, but we all know because of the cloud, storage has become a big deal. Here's another retail apparel footwear. PVH is an interesting name. They own a lot of brands. Is that not one of the better looking charts that we've seen today? It broke above its moving averages back here with a bunch of kahunas, a mobile breakout from a squeeze in May. And it's been in a nice uptrend since. Had pulled back to the 50, so it was showing up on my pullback to the 50 in an uptrend. And then boom, kahuna. Earnings are not out yet. PVH looks outstanding, and you could have found it with my scan on Thursday and got into it before it broke out further on Friday. Caleres, kind of sideways. I'm not sure I'd be jumping on this one yet. And then Nike, Foot Locker. Sells a lot of Nike products, I suspect. Nike breaking out as well. So I typically, on a nightly basis, will go through the top 10, and then I'll look at the ones to the downside. Then I run a couple of scans within TradeStation, and then I look at the winning charts, and then I'm done. And we'll go through my hour-long review on Sunday during my training period. The other thing that I do, and we're just going to finish there, is I like to go to the new smart groups, the custom groups, and then each night, even if I don't have time to do my usual, I'm going to take a look at these top 50. So let's very quickly go through them, and I'll tell you my thoughts. I'm ranking them here by two-day force. And one thing to keep in mind that some of these have run a lot. NetEase has been a tough stock for me to hold because there's a lot of, sorry about that, volatility in this name. And you can see it's had a clear uptrend, but it has these pullbacks, and some of these are $40, $50 moves. But it certainly looks like it's breaking out on earnings and at all-time highs. Ross Stores, earnings are out. Another one of the retail stocks breaking out. YY, a Chinese communications internet stock, nice uptrend, big move on earnings on Wednesday. Children's Place, another strong retailer. Square, what a move. Now, you look at the high jump bar here, and the high jump bar could not get any higher. It's pegged. And when that high jump bar is getting above that dotted line, I know it's the highest extension it's been in since it's been traded in this case. Stocks with that high jump bar often will pull back. I wouldn't be going long here. I'd be thinking of booking some profits. Burlington Stores, here's a retailer that's been strong for a long time, makes money. Earnings are out in a couple days. IGG Photonics, I have no idea what they do. Some semiconductor company, $238 stock. What a move. Too late for me. I kicked myself because I watched it early. Insperity Professional Services, again, it's already had a run. So one of the problems with these stocks is we might be catching them too late. Here's Fanhua Insurance Services. Moody's Corporation. Here's a big uptrend, sideways for about a month, pull back to support, had a mobile breakout from a squeeze, a pocket pivot, a Kuna on Friday. Looks to me like it wants to go higher. A similar pattern, United Rental, sideways and breaking out. So I'm not going to go through them all tonight, but I typically will look at these on a nightly basis. And then within the smart groups, there's a number of the ones that I like to look at, such as in my group, stocks that had big volume, those that have pulled back to the 50 with a kahuna. These are my favorite stocks to buy. Look how many gold stocks are here. Kind of why I got suckered in and bought my nugget. Of course, it's going to get my handed to me if the dollar strengthens, but I don't want to hit that one. But here's a bank. Not telling you to buy it. I'm just showing the pattern. Uptrend sideways, sitting on the 50 with the kahuna. So you have an uptrend, pause to refresh, and momentum. Here's a couple of the gold stocks that I was mentioning. Sitting on the 50, not much of an uptrend, kind of a sideways, but momentum coming in. That's a pattern I look like. So that's what I do. I have a number of stocks that I follow closely, such as the Canaries. I scan the market, as I showed you in HGSI, on a nightly basis. Within TradeStation, I have some scans that are sort of my go-to scans, and these include things like it might even not be in this. I got that will look for various person buy signals, combinations of some of my HGSI indicators and buy signals. So I like scanning to find things. Other people like to stalk. Stalking is having a limited number of stocks and going in and out of them based upon changes. So a lot of different ways to play. At this point, I'm getting tired. You're getting tired of hearing me, so I'm going to get ready to say goodbye. Let's go back and see if the futures have changed at all. Gotten worse, gotten better. A little bit better, but clearly this market's setting for a soft opening in what is typically a strong week. There's no question. I said that in the beginning. Where I said, are we going to move up or move down? There's a lot of confusion. Nothing has changed in that. Can make room for another couple of people for this week. Those that are coming, look for an email later tonight or tomorrow. First closed webinar will be Tuesday, then another one next week, and then we'll see you next weekend. Goodbye, everybody. Have a great week, and happy